Welcome to Teaching Tuesdays. It's brought to you by Passive Cash Flow for Life, which is Nicole and I's education company. We teach multifamily. We also have a residential company that does that as well. And we decided to put these together just as a little bit of a give back and to be totally transparent, obviously, to advertise the course that Nicole has put together and has been teaching for the last 10 years. So this is today, Nicole, if you don't know her already, she's pretty well known, owns many thousands of apartment buildings and apartments, I guess not.
Yeah, not buildings.
Doors, all right? She owns a
Yeah.
lot of doors, mobile home parks, a little bit of self-storage, and is a wealth of information. So she's been doing most of these. And Nicole, I'm going to hand it over to you to talk about today's topic and kind of go from there.
All right. Thanks, James. So the first thing is that we're going to try and talk a little bit today about markets that you may want to consider for investing or looking for investments in. And what we did last week, to just bring us up, was to talk about tertiary markets. So markets that are smaller that might be good places to invest. And this week, what we're going to talk about is some cities that for one reason or another, I think are worth taking a look at. And if you then kind of look at the city and then kind of work out to the second or third tier out, most of the time you're going to find tertiary markets. So in a way, these two are linked. What I'm trying to talk about today, though, is some cities or some areas that I think might be interesting, but also want to talk a little bit about the criteria I use to sort of try and find some of these cities. What we normally do is we talk for 15 minutes, 20 minutes, something like that. And then we just open it up for questions. So the Q&A can go as long as you want, up to an hour. So, but it also, what we're trying to do is keep these presentations short because I want to be respectful of people's times. So if you don't have questions, you're more than welcome to drop off at this point, at some point after we finish the little presentation. But people have some pretty interesting questions too, so I hope you stay. So the first slide here I want to talk about a little bit is some of the criteria I use to try and find markets. So I want to tell you, I am not somebody who's going to be looking in the markets that everybody knows about, that everybody knows are hot markets like Seattle and San Francisco and Washington, D.C. and Phoenix and some of these others, because they're already on people's radar. And so the prices are priced accordingly. They are more than likely going to be also a premium price. So what I'm trying to do is use some of the criteria that you see in those big cities that everybody knows about, but are not as well known. They may not be performing quite as well, but they're on an uptick. And so I just want to start here just with this slide with talking a little bit about that. So for those of you who may not know the term MSA, it's a metropolitan statistical area. And across the country, there are many of these. And basically what it describes is an area that seems to be when you look at where jobs are, if you look at where people commute to work, if you look at kind of the general area, MSA is you'll see the big city kind of sitting in the middle of that, and then where people commute to or find jobs out. So they're still commuting in, but they may live out. So when I talk about an MSA in relation to markets, most of the time I'm not looking at the big city itself. So when we go to these cities, it's going to be, particularly the larger cities, it's going to be the name of the city. But I am not suggesting that the city itself is a place to look at. I'm suggesting that you look out in the MSA, out to the second and third tiers, out where the prices are better. You have people are still commuting in to work maybe. You still have the same criteria or the same strengths that you tend to see closer in. So I hope that's clear. If it's not, we can ask questions here in a little bit. But some of the criteria I use and would suggest you think about to try and find areas or cities that are good for potential investments. Our number one is job growth, without a doubt, job growth. So our jobs coming in, right? And you can find those, you can find that in census.gov. You can find it in Google searches, what are cities that are job growth, where there's good job growth. You can identify a certain area that you like and then Google it and find out what the job growth is related to that area. So the reason we're looking at job growth is obvious, that we need an area where there is a demand for multifamily or other kinds of places for people to live. Okay. The second area is wage and salary growth. So we're not just looking at jobs, but are they the kind of jobs that are going to bring people in? And the reason I'm looking at this is that if you have high-tech jobs, which is the next one, or you have engineering jobs, or you have government jobs, when those are growing, they bring with them service jobs, the other kind of jobs that come in to take care of the other growth within the community. Wage and salary are basically the things we start looking at to tell us if we've got good jobs coming in, jobs that people are going to want and that represent businesses, they represent manufacturing, where they represent healthcare, they represent other kinds of things or employers that are likely to stay for a while. High tech is just that. High tech drives a lot of GDP growth. And it is wage and salary growth along with it. Okay. The other thing that may not be quite so obvious is access to more than one internet provider. That tends to tell you that there are a number of jobs that are coming in, or it's a area that's big enough that that people can work from home, they can work from remote places. And the last one I just want to talk a little bit about is affordability index. And that's becoming more important all the time, I think, particularly post-COVID, because the rents have gone up so much, housing prices have gone up so much. During COVID, there weren't a lot of housing starts. So we're probably 2 years behind in the number of housing units. And we couldn't evict when people couldn't pay. So there was a scarcity of rentals. That's driven a lot of the costs up. Inflation has gone on. All of those has made it the affordability of an area to become more and more of an issue. And you tend to see those more in city centers or areas of that are close in, that the prices are, we're just pricing people out of housing. And so we don't want to be in a position where you have a lot of, there's nothing wrong with service jobs, so don't hear me saying that, but they also don't pay the best in the world. And so when you have wage and salary growth and tech jobs, you tend to have salaries that are higher. And so as the affordability, as prices for housing and other things go up, that you don't see such an impact on affordability index. All of those criteria are things you can find by looking in various websites. Most statistical areas, you're going to be able to find affordability index. In the Washington metropolitan area, the affordability index is terrible. Nobody can afford things, and the salaries are pretty high here. So that's another reason to be looking out. So now let's just turn for a little bit, and we're going to talk about, I think that's the next slide. So here are some of the bigger cities. Now, these are not the ones that is on everybody's radar screen, right? These are things where I see things coming in that I think they're good size cities or MSAs. Generally, the MSA is going to have over 200,000, 300,000 in it. And so some of the ones where you see a lot of growth going on right now, Lubbock, Texas, kind of McAllen, Edinburgh, Mission, Texas, Waco, Texas, New Haven, Milford, Connecticut, and believe it or not, Camden, New Jersey. Now, there's some others that we're going to be talking about, but there's some there to think about. Small cities where there's a lot of stuff going on to be looking at. Lewiston, Idaho, believe it or not, and it says Idaho, Washington. So Lewiston sits right on the border. Champaign, Urbana, Illinois, Elkhart, Goshen, Indiana, Sierra Vista, Douglas, Arizona, Rapid City, South Dakota. So these all have jobs of various kinds coming in that might be worth taking a look at. Now, these are other cities that I tend to like right now, that I see some interesting stuff going on. They're not quite as obvious as some of the others that I was just talking about. So you do need to do your own research. These are just sort of on my radar. So large cities, Springfield, Missouri, Knoxville, Tennessee, Kansas City, Missouri, Portland, Maine. And some of the smaller cities, Greenville, North Carolina, Hammond, Louisiana, Johnson City, Tennessee, Ames, Iowa, California, Lexington Park, Maryland, and Morgantown, West Virginia. So I am going to sort of leave it there. This is kind of a shorter one, and let's open this up to questions. Questions first about anything we have here, and things you should be looking for. But if you have other questions about other things, please go ahead and ask them. Feel free, and I'm going to let James we can go ahead. There aren't that many people on, so open your mics and ask your questions. I love to be able to talk to people.
I have a question.
Sure, Michael.
Hi, Nicole.
Hi.
With regards to the job, well, actually, with regard to the city or the MSA, I was on your call. I was on this call last Tuesday and looking at the census, and we were tracking, I guess, from like 2010 to 2020, what the census was reporting as far as the population.
Yep.
Okay, so this may be a two-parter. We pick an MSA one of them that you just announced. The first question is, you say you may not be directly center of the MSA, but you may go out to a secondary and tertiary market. Number one, do you determine that based on driving time or driving distance to kind of look at those surrounding secondary and tertiary markets?
If you look at an MSA,
Mm-hmm.
and you actually try and get a map of the MSA,
Right.
You're going to be able to see where the commute patterns are. Now, so you'll be able to see in the third tier out where they're commuting.
Okay.
So, for instance, Frederick, Maryland commutes into both DC and into Baltimore.
Right.
Where York, pretty much Pennsylvania, commutes down to Baltimore, and it
Okay.
may go up to a couple of areas in Delaware, but you
Right.
can see that on those MSA maps where they're commuting to.
Right.
What you see in census.gov is in those smaller cities that are out. You see if they've had a good population growth, right? So you can
Right.
quickly screen to see if their population is going up or not. What you
Yeah,
can't tell is if they've added a lot of jobs and or what kind of jobs.
Right. And so just in line with that, for job growth, you're basically saying you're looking at that MSA as kind of a draw to the area, but then you've got to do, some more analysis and due diligence to see if where in those secondary and tertiary markets there's growth.
So if I was to, I'm going to back up here for a minute. So let's just take Greenville as an example, right? And I don't know much about the area. So if I was looking at Greenville,
right,
it's a small area, so the MSA is not likely to be that big,
no,
right? But
no, it's somewhere in the middle between, I think, like Raleigh and Wilmington.
Okay, so you know the area better than I do, but if I was to be looking at that, I would be sort of looking at a map and seeing what smaller areas people are commuting in from.
Okay.
So I can get a sense of not only Greenville, but other communities surrounding it. Greenville isn't so big, so jobs coming in to Greenville, and I'm going somewhere with this, jobs coming into Greenville, it probably doesn't matter too much whether the jobs are to the east of the city or to the west of the city, because people commute across.
Right.
But if I'm going out to Kansas City, Missouri, which is a big city, and I look at the MSA, it's going to be moving, you're going to see a larger circle. And jobs are not necessarily in Kansas City going into city center. Businesses are not opening up in city centers. They're opening up in towns to the east or towns to the west. So when I go looking at job growth or businesses coming in, I'm looking to see where they are placing those businesses, because that's the area that's likely to be growing, and that's the area where I'm going to be looking more. Most people are not going to commute from the far east of Kansas City, Missouri, all the way over to the west in Kansas City, Kansas, right?
Right.
It's too long a commute. Not some won't, but most don't. Did that get to your question, or did I miss it?
That part of it, I guess. So with regards to job growth, and you foot stomp, that's number one. So let's say, I'll give an example. Intel, let's say Intel is coming in with a new plant somewhere.
Yep.
Near Kansas City, but it's not actually going to be in the center of Kansas City. Let's say it's in a town outside of Kansas City.
Yep.
All right. With looking at that job growth, you say, oh, wow, okay, Kansas City, there's going to be a new Intel plant that's going to be somewhere in Missouri or somewhere in Kansas. Do you go to I'm assuming you're talking about going to that area or near that area where that growth is happening, even though the headlines may say, hey, it's coming to, Kansas City, but it's really 45 minutes out. So I'm not necessarily looking at Kansas City as the market. I may have to look at my market, that initial market being that 45-minute area away from Kansas City. Does that make sense, what I'm saying?
Yeah, and that was exactly what I was trying to say.
Okay.
Is that in that same, if Intel was coming to Greenville, people are going to commute from all around because it's a small city.
Right.
But if it's Kansas City, Missouri, it's a big enough area that you really need to not only know that overall Kansas City is growing, but as job growth is coming in, where is the job growth? Where are those companies coming in? Where is the high tech, the high paying jobs, right?
Yeah.
And then focus more there.
Okay.
All right. Other questions? On other topics, does anybody have other topics they would like to ask questions about?
I have a question, and this is on the job growth.
Uh-huh.
So when, let's say, you evaluating an area and then you considering the job growth, how many months should you consider, and what is the percentage that you should look for?
So when I'm talking about housing, so let me just kind of do a couple of things here. One of the things when you're looking at job growth, you can do a quick scan looking at census and other kind of data for what has the overall increase in population been. That's going to give you a sense of whether an area is growing or it's not. When you start looking at job growth itself, there you can do several Google searches that would, or other kind of searches that would be areas where there's been the largest job growth over the past year, right?
Okay.
So what I am not looking for, you can also see things pop up on news feeds where Kansas City is adding an Intel plant, right? Plans to add an Intel plant. But a plan, a lot of times these plans never go to fruition. So I'm not going to try and look to buy something based just on a plan. I want to see that they've selected a site, that they've done some architectural drawings, that they've done something that tells you that it's actually going to be serious, that they are that they're actually planning to do something. A lot of plans just end up on a bookshelf, right? Because of changes in this and changes of that. So some of the areas you can kind of really get ahead of what everybody knows is finding some of those areas where you have it's somebody's actually going to build something or bringing a business in that has enough employment that it's going to impact the area, that you're going to need more housing units. So what we're really looking for on the whole is that there's a need for more housing, or there's going to be a need for housing that we can supply, that we can get in, that our housing, our rentals are going to be easy to rent. We're not looking for areas where there is a lot of excess housing. Now, that's not a big issue in most places right now because we're behind. But you're looking for job growth, jobs coming in over the past 2 to 3 years or planning to come in, where there's actually some execution of the plan in the next year or so, because it's going to take you 3 to 4 months to find something and get it under contract and closed at least. So you can be a little ahead of when they're actually going to be hiring, but I wouldn't want to get too far in front of the process. Did that answer your question, Ferd?
Yeah, you did. And I have another question. So you mentioned all these factors, job growth. Should you also consider rent ratio for that? I don't know if that was also mentioned.
Well, that's where it's getting to the affordability index. So
Okay.
if you have somebody, so as rents have gone way up, right? Then for us to be able to get market rents, people have to be able to afford our product, our housing.
Yeah.
And so if salaries haven't kept up with the price of housing, like in Washington, D.C., then that becomes not a great place to go looking for properties, right? It is that ratio of what people can afford versus what it's going to cost to buy and or rent something. Because one of the things that's happening across the country, because rents went up so much, is that people don't qualify, or having more of a difficulty in qualifying for apartments to rent. And you're seeing people not be able to afford anything and end up on the streets like in LA and San Francisco because it's increasing homelessness. So affordability index is something that you ought to be having on your radar and paying attention to. And that's another reason that I'm not really interested in city centers or first tier. I'm more interested in areas that are out because they're not as expensive. Rents didn't go up as high. The affordability index isn't as bad. That get it, Ferd?
Yep.
Okay.
Thanks for the explanation.
All right. Anybody else? Other questions that people would like to ask? I don't have the time right in front of me. James, how are we doing on time?
We're right at 7:03, so we're good.
All right. Okay, well then let me ask
Okay,
you guys.
I have a quick question.
Good.
Yay. And I can't remember what it was, but are there states where the regulations and such make it, are there states that you avoid?
Yeah, Maryland.
Besides Maryland.
There are other states. So some of the states that are most difficult to deal with, although I don't have property, I have property in 11 states, so I can't speak about, a lot of them. But California is pretty difficult to deal with. Illinois, New Jersey, New York, Massachusetts. They have a lot of rules and regulations, and the laws tend to be more in favor of the tenant than they are the landlord. States where it is easier to work in are Virginia, Texas, Idaho, Montana, Wyoming. I don't want to get into blue and red, but
right.
If you were to make kind of a broad picture, red states tend to not have quite so many rules and regulations, and the bureaucracies aren't quite as high as they are in some of the blue states.
Right.
I have properties in Oregon and Washington and Maryland, and they all have their own challenges. It's just Maryland is to me is a business unfriendly and landlord unfriendly state.
Okay. DC would be in that category too, right?
Oh yes, it's true. I don't have anything in DC, but yes, it definitely would.
Got it.
So Virginia, Delaware, Pennsylvania. I have properties in Pennsylvania. West Virginia is good to work in. Virginia is good to work in. And then some of the, Georgia is not too bad, but it does have, in terms of eviction, but it has some fairly significant landlord tenant laws too.
Okay.
Hmm. Good question, Vicky. Thank you.
Thanks. Thank you.
Okay, so I would like to, and maybe James can take a couple of notes. I would like to get some insight as to some of the topics you would like to hear us discuss on these Teaching Tuesdays. So what would be on your mind? What would make you come to one of these calls?
Hi, Aisha Hudson here. Thank you for having this. It's been very informative. This is the second call that I've been on. I would like to better understand how to analyze projects. So when I come across a deal, and I'm in DC, we have the tenant-friendly laws, just like you guys mentioned. So like when we come across an opportunity for what we call a TOPA deal, I want to be able to have a process that I use to analyze it so I can quickly respond to RFPs and put contracts in on opportunities. So
All
a
right.
process.
Well, you were really a good straight man there, because that's actually what we're going to talk about next week. That's actually we're going to talk about a quick way to take a look. I mean, this is just a brief, scan. So this isn't really going into any depth, but this will give you some criteria for you to be able to figure out whether it's something that might work or not. All right.
Awesome.
So that's next week.
Aisha here again. I'm also interested in renewable energy and how to develop sustainable properties where, not just using materials that last long for the tenant, but how can we start to incorporate more sustainable practices so maintenance isn't such an issue when we keep the property. I generally rent and hold.
Yeah. I can do some of that. Now, I'm not really up on a lot of green, but we're going to be bringing in some other people to talk. So maybe we can find somebody who does some of that. I can certainly talk about things we do to keep the maintenance reasonable. But if you don't keep properties up, I mean, you're going to have a budget for preventive maintenance and other things like that, so that the things stay in reasonable shape, right? So we'll put that on the list.
Can you still hear me?
Yes.
I can, Vicky.
Oh, hi. I would be curious about sources for finding property other than the normal.
Other than kind
ones.
of brokers.
Yeah.
Okay.
Yeah. So.
All right, we can do that. That's a good one. Now, understand, we also talk about raising private money. We talk about managing properties. We talk about
Good.
managing businesses, the business of real estate. So if you're thinking about topics you'd like us to talk about, don't just think about acquisitions, because in the end, acquisitions is one of the easier things to do. I think there's a question in the chat. Is that?
That was a
is
thank
that-
you. That was
Yeah,
a thank you from Dan. You had to get off.
Okay. All right. Anybody
Hi.
else?
Aisha here again. I'm also interested in partnership structuring. I'm to a point where it makes better sense if I can start to partner for certain projects. So to divide the duties as well as the equity requirements. So how to structure those going in. I really, I'm interested in best practices.
All right, well, we can talk about, that's a big topic, but we can probably come up with a couple of of things because it depends on how you structure it, whether you are going to find yourself needing to follow the Securities and Exchange rules and regulations or not, and what some of those are, because that makes a big difference versus like a JV deal or something like that. But that's a good suggestion. All right, have we got anybody else? Naisha, have you got anything that you want to talk about? Billy, Deborah?
Hey, Nicole, I'm thinking of doing a general due diligence. What steps, what you need to look for, after you have a deal.
Okay, we can talk about that in general. That's kind of one of the big important things that you really have to be able to nail to be able to successful in this. So due diligence, I got that on the list.
Hello, Nicole and Jane.
Hi, Yan.
Hi, how are you doing?
I'm good. How are you?
Fine, thank you. I have a question regarding today's market. Do you think mobile home parks, it's looking for mobile home parks easier than the regular apartment building? Because the rent is like sky high everywhere. So do you think buying mobile home parks maybe get tenants faster, maybe?
Well, to me, there are pros and cons to both apartments and mobile home parks. I have, I don't know, 17 or 18 mobile home parks, and I like them. I like them a lot. They are probably one of the last areas of affordable housing for people. So you have mobile home parks that are, geared towards the, the over 55 and the higher income. And you have some that are family parks, and the family parks are certainly more affordable. They are different in terms of what you need to do to manage them. So it's different in a lot of ways for management. The other thing that's a downside to mobile home parks is they're harder to get loans on them, to get financing from them, because they are not lenders' favorite asset class. But the good side is that if you're looking to grow for your cash on cash return for long-term wealth, mobile home parks, manufactured housing has, I think, the best cash on cash return of all the asset classes I buy. So, because they're just not they're not as expensive as apartments, right?
Yes.
So, I like apartments. I like mobile home park. So there's pros and cons to both. And maybe that would be a topic we can talk about one of these Tuesdays, is the pros and cons of each kind of asset class I buy.
So
That's a good idea. Yeah.
I'm sorry. How about the interest rate? Do they treat it just like the normal apartment complexes, or?
They may be a smidge higher, but not much. The issue is finding a lender who will lend on them. But there's a couple of lenders out there who preferentially lend on manufactured housing. The key is you have to buy one big enough that they will, because that most of them have a floor of 1 to 2 million in loan. So you have to find a bigger. There are more mobile home parks because they are harder to get financing for, and they're more likely to have vacancies and other issues. Since a lot of them aren't managed very well, that you're much more likely to find owner financing on manufactured housing than you are in apartments.
I see. Thank
So, there's, I don't know, James, what do you think?
Well, I think you're absolutely right. I think it takes a different mentality from a property manager to run a mobile home park versus an apartment building. Most of the stuff that we do, or I guess all the stuff that we do, is really value add. So in terms of rent growth, I think you have to be, when you analyze a deal, the rent growth on a mobile home park is always going to be a lot less than the rent growth in an apartment building. So I would think, and Nicole, correct me if I'm wrong, you have a lot more than I do, but I would think that your biggest upside to a mobile home park is not so much to go in and increase the lot rent, but it's really to go in and fill up the park. So if it's like 70% full, you've got an opportunity to build it up to 95, 96% occupancy, but you're buying it at 75% occupancy. So you're playing that spread, so you can do really, really well on your return. But Nicole, what do you think?
I think that's, there's a lot of truth in that. I also think they tend to be mismanaged more because you tend to have, mom and pops. And so there's a lot of places you can do to, you can increase lot rent. You can also, a lot of them have park owned homes. So those rents can go up, which also can cut expenses. I mean, there's a lot of, you certainly see with apartments more dollar amount that you can raise the rents. And so for actually putting cash in your pocket, that may be better. But for cash on cash return, how much your money's working for you, I still think mobile home parks, manufactured housing is probably the better bet. But we buy both. I don't know what to tell you. I like them both. If it's a good deal, I like it.
Right. It's a good deal, it's a good deal, right?
That's right.
Thank you.
All right. How are we doing on time here? So we have a couple more minutes. Any other ideas about things that people would like to have questions or that they'd like to hear us talk about? Billy and Deb, we haven't heard from you. Deborah Wilson, Billy, anything come to your mind? I don't want to put you on the spot. So if you don't have anything, don't feel like you have to ask.
That's okay. We know Billy. We can put her on the spot.
You put her on the spot. I'm not going to put her on the spot.
Nothing comes to mind.
Okay. All righty. Thank you for coming.
Thank you.
Thank you,
Hey,
Jane.
Nicole.
Nicole. Thank you.
This is Fed. One thing that comes to mind is property management and how you hire property managers and how to manage them. That's
okay. Yep, that is it in a nutshell. I mean, I think property management is actually more important than buying them right, because you're in it for the long term. And so if you don't manage them right, it's just kind of lights out. So we will try and put some things on with property management here on a couple of those. I have kind of a list of things that I've been thinking about. Let me see if I have any property management. Yeah, so raising rents without having people move out on you, screening tenants, key measures to manage properties. Those are three that I have on my list for property management. So if you have other topic areas, we will, but I've been trying to scratch things out for the next couple of months of what I want to talk about. Thanks, that's a good suggestion. All right, we don't need to keep everybody on if there's no questions. Everybody's time is valuable. So let me come back down to this, and I would just suggest to you that if you are interested in seeing more, we have a couple of hour webinar that's just that really is just talks about a broader topic rather than these 15-minute kinds of things we do. So feel free to sign up for that. And James, you want to talk about when you post things and what on our YouTube stuff?
Yeah, so what'll happen is what we try and do is have everything edited and up on our YouTube channel by Thursday evening. And then at the same time, I'll also send a link out within a couple of days that'll have the actual replay. So if you can wait for the email, you can go right to our YouTube channel. The nice thing about the YouTube channel, obviously, is not only is the last times Teaching Tuesday on there, but as we continue to do these, like the last 3 are already on there. So this would be the 4th one. And as we can continue to do these, it'll be kind of a wealth of information for everybody to go in and kind of pick and choose in terms of, you know, return on investment, how to use financial calculator, all sorts of different things that we do. I will tell you in terms of the multifamily webinar, it's actually really good. Nicole covers several things that we haven't covered yet. Things like the phases of the job market. You know, you could have a job market that is in a good phase in one part of town and a job market that's in a bad phase of the market in another part of town. So it's pretty interesting to get a chance to watch that. She also talks about key numbers and she also talks about mindset, which she continues to say, and I can't agree more, mindset is everything for this business. The actual mechanics, if you get a good enough teacher or you learn enough, I think are great. I think 95% of the people can do that. It's not easy, but it's not rocket science either. You do need some guidance. You can't just do it off a YouTube video. But again, it's not rocket science, but the mindset behind being successful in multifamily or in anything else, any other business, she talks about as well. So I would highly encourage you, if you haven't seen it yet, to go out there and learn a little bit about that. And obviously she's had great success and obviously she has great mindset.
Yeah, thank you. So the last thing I'll say, and then we'll sign off, is that the next 3 Tuesdays, I just want to tell you. So next week, we're talking about first level analysis. How do you figure out in 5 minutes if it's a deal to look further at? Then on the 28th, we're going to talk about ways to decrease resident turnover. Turnover is your biggest controllable expense in managing any property. So how do you control turnover? And then on March 7th, James is going to be talking about building relations with potential investors. So those are the next 3 things. And we hope to see you back. And I really appreciate you coming and being a part of this. And I hope to see you next Tuesday.
Sure. Thanks.
All right, guys.
All right.
Have a great night.
You
Thank
too.
you.
Thank
very
you.
much.
All right.
You.
Thank you.
Bye.
Thank you.